Welcome to My Game is Money Investing with your host, Mr. G, the resale trader. Today's episode is going to be about ticker symbol CCL, which is Carnival Cruise Line. It's a stock and company I've invested. My approach has really been an all-in approach. I'm actually invested 2,700 shares at $18.19 per share. As we can see from the tip ranks breakdown, analyst consensus is at a hold. I will also, we'll review that the average target price is $22.14 with a high estimate of $30 and a low estimate of $17. Smart score rating is 1. And the reason for the breakdown, obviously we'll take a look at the analyst rating, has it at hold. Blogger opinion is at bullish. Hedge fund activity is decrease. Insider activity is sold shares. Tip rank investors are positive. New sentiment are very bearish. Take that back, bearish. Technical analysis and momentum is negative. So we'll pull out of there and we'll go to the Seeking Alpha, which is the other platform I like to use, and we will go. All right, so we'll check the rating summary. Rating summary for Seeking Alpha is at hold, Wall Street is at hold, and Quant is at a hold. And so valuation C plus, growth is B minus, profitability is F, momentum is C minus, revisions is C minus. What I'd like to do after that is I'd like to go to an article. Because I'm quite bullish on on this particular stock at this moment. I'm going to go to an article that has a strong buy rating. Carnival, multitude of challenges ending, which is true with the COVID-19 restrictions being lifted, mandates being lifted, mainly here in Florida. But really across the nation right now. So we'll hit the summary. A summary: Carnival reports another difficult quarter due to the Omicron variant, but the cruise line is now a month away from operating at full capacity. The company forecasts turning EBITDA profitable within months and generating a profit in fiscal quarter 3, 2022. The stock is especially cheap, with a clear path to $3 earnings per share. All good signs for me. While Carnival, ticker symbol CCL, didn't report a perfect quarter for the period ending in February, the cruise line is moving ahead towards a full recovery. The company is now on the verge of returning a strong profit with the full operations launching by May. My investment thesis remains bullish on the stock while the market focuses too much on short-term issues such as high fuel prices. Transition period. The cruise line sector is going through a transition period of relaunching all of their ships while COVID restrictions limit passengers. Carnival reported fiscal quarter 1, 2022 revenue of only $1.6 billion, or some $0.6 billion below analyst forecasts. The company ran into substantial issues with near-term sailings due to surging Omicron variant, causing both trip cancellations and pre-travel positive tests forcing cancellations. Regardless, Carnival made progress in moving fleet capacity in service to 60% in the quarter and 70% currently. But the occupancy rate was stuck only 54% due to the COVID issues. Carnival is closer and closer to having a full fleet in service, which will boost revenues and reduce the ship dry docks, causing higher costs. The cruise line will return to a positive EBITDA with only with or without higher fuel costs, as March occupancy reaches 70% and 40 sailing topping 100%. The cruise line made an impressive move to reduce the fuel cost impact over the last 15 years. Per CEO Arnold Donald on the fiscal quarter 1 earnings call, Carnival has cut the fuel impact by over 30% already, with another 10% on the way. With our proactive efforts to reduce our carbon footprint since 2007, we have reduced the unit fuel consumption nearly 30% and carbon intensity nearly 25% through 2019. And thanks to accelerated efforts across the board, upon reaching a full fleet operations, we anticipate that we will achieve a further 10% reduction in unit fuel consumption and 9% reduction in carbon intensity as compared to 2019. Carnival forecasts 2.2 million metric tons of fuel consumption for the remainder of the year, with a cost of $795 per metric ton. The company forecasts fuel costs of $1.75 billion for the rest of the year, or $583 million per quarter. Fuel costs are meaningful, but the cost is only 10% of revenue, with the expectation to reach $5.5 billion in the quarters ahead. In other words, the current quarter result are another throwaway quarter. The real results won't start until fiscal quarter 3, 2022, or around June, when all of the ships are sailing at decent occupancy rates. Now, of course, to me, really that just says exactly what my thesis is, which is right now we're just basically coming out of COVID. Omicron variant is kind of fading away. We really don't even talk about it anymore. They're trying to fucking build up this BA1 whatever crap variant is coming out. Hopefully that doesn't impact the stock too much, but I don't think it will. It's kind of getting kind of shoved under the rug right now, so hopefully that's what it does. But these are my platforms that I use. I'll share these with you at later videos. Hopefully you enjoyed this video. And real quick disclaimer, I'm not a financial advisor. Please do your own due diligence. These videos are for entertainment purposes only. Hopefully you enjoyed the video, and hopefully you'll join me on the next one. Please hit the like, subscribe, notification bell, and leave a comment. And see you on the next video. Appreciate the time.